This is Professor MoneyPigTrading, a former PhD drug researcher, now data scientist and trader. Today is March 2021, not from the future. And today we're going to talk about U.S. infrastructure plan, and President Biden is going to announce it tomorrow, March 31st at 4:30 p.m. Eastern Time. And potentially they're going to raise different type of tax to afford this very expensive plan, which we don't know the details. Some speculating will be $2 trillion. Some say it will be $4 trillion, but breaking into two parts. But it looks like it will be broken into two parts, and tomorrow we'll focus on railroads and road reconstruction. And it's an overdue project that the U.S. infrastructure are really outdated. Definitely needs some improvement, and they hope that by raising these capitals, they can afford this infrastructure plan by creating more jobs and also improve this infrastructure to make the U.S. economy more efficient. So if this really happens, what should we position ourselves in the market? So first of all, if they make the tax raise effective as 2021 instead of what the market originally expects in 2022, we could see QQQ like tech, SPY, and growth stocks like Apple, Google, Amazon start to pull back down further. However, potentially we can see the industrial names that we're going to introduce perform relatively well in the broader market. So just to start with, we're not financial advisor. This is just education contents, blah, blah, blah. So the first thing we would recommend people or traders or investors to hold is cash and patience. And this is what we are telling money pick trading community as well. We see this market month end, quarter end, just a lot of chaotic, fund balance. Not to mention there's a hedge fund having a margin calls, right? We're just seeing some stock being oversold like Discovery Communication, which we also recommend to buy. This great fundamental, but just being oversold. So having some cash and patience ahead is definitely something that is not going wrong at this moment. But on top of that, if you're looking for some industrial stocks, here they are. The first one is Caterpillar. You might have seen this name. We actually, in our cover page, the picture is from Caterpillar as well. They're actually the biggest machinery manufacturer in the world. And they have a really good technical chart right now, pretty much since last year's one line up since COVID. And currently, if we can break the all-time high 237.78 and hold, we have room to 240 and 250 in a month. It's a relatively low beta name, so that means this stock is relatively stable. You won't see high volatility. And the P ratio is a bit high, 42, but compared to other growth stock, it's relatively like a middle range. It has a really good fundamental with cash flow and earning per share, EPS 5.46. So definitely a stock to keep an eye on it. And also, of course, when you need, you're going to build a lot of roads, you need a lot of those machinery from Caterpillars, right? But if you're going to buy one, you will need to rent one. That will be from United Rental, URI. Currently, it's all-time high breaking through. The all-time high is 336.32. If this level can break and hold, we have room to 350 in a month. This name is relatively high beta. That means it's more volatile. So if you have position on this one, you might want to size your position properly and perhaps buy some put options to hedge your position. The P ratio is relatively lower than Caterpillar, but it has a really good earning per share, $12, and also has a really good cash flow as well. Definitely another stock to keep an eye on it. The other one we really like is Freight Car America, which we mentioned in the previous video. The stock ticker name is RAIL, R-A-I-L. Currently $5.65 and $6.12 are our next major resistance. If we can break through and hold $8.59, we have room to push to $12.55, and there's a big gap between $12.55 and $15. As a high beta name, so that means this stock could be more volatile. We don't have EPS because this stock was losing money until last quarter. This stock has been losing money for 3 whole years until last week we report a really decent quarter, and it started to become profitable again. Now with the infrastructure plan start to come back in, helping rebuild the railroad hopefully will help this stock. And also we have to mention this stock is not only just infrastructure plan play, also because of the Keystone Pipeline being suspended. Now we'll rely on more railroad to ship those oil products. and that will require a lot more orders from this Freight Car America for freight car orders. And also, not to mention, last week, or 2 weeks ago, there's a news that North America is going to build the first railroad network connect the Canada, U.S., and Mexico, so that they will have a more completed railroad network, and that will also bring out more freight car demand in the future. So definitely a name to keep an eye on it. And also, this stock is relatively inexpensive and it's really beaten down at the moment. So definitely have more room to grow to the upside. The other railroad name we recommend is CSX, CSX Corporation. Currently is all-time high breaking through, forming a flag to the upside. If we can break the all-time high 98.09, we have a target 99.76 and 102.98 in a month. The P ratio is moderate 26. The earning per share right now is 3.6. So it's also solid fundamental, decent name, just hasn't picked up a lot of momentum until potentially the infrastructure plan upcoming. The other industrial name that you should keep an eye on it are railroad names. KSU, Kansas City Southern. This one has even more growth space for compared to CSX, but this KSU just more volatile, and the stock price are pretty expensive already. The other one we really like is also Union Pacific, UMP. Definitely take a look. The other heavy machinery names are Deere, DE, CMI, Cummins, and GE, General Electrics. They're also a pretty good one. Make sure if you are looking for a target, also take a look at them. Just want to highlight we have a really good long-term investment program on Discord. In 2020, we have a really high winning rate and good average return per trade. If you like our video and want to check us on Discord, feel free to check out MoneyPigTrading.com. We also have an option focus swing trading programs. But if you want to look at our alert and trade stock, you will also have a really good winning rate. We have a really good performance, as you can see here, across several months since we started the service. Again, if you want to check us out on Discord, please go visit our website at www.moneypigtrading.com and follow us on Twitter, YouTube, and Instagram, also MoneyPigTrading. Make sure you like this video and feel free to comment in our video if you have any questions. Thanks for watching and see you next time. Bye-bye.